All right, hello everybody and welcome to another Learn It Live webinar for Pepperstone. This week we're talking about something pretty special, near and dear to Tyrone and my hearts, and that is shares, but more importantly, Australian shares. That's right, the ASX 50 or the top 50 shares are now going to be available with Pepperstone on the MetaTrader5 platform. So we're going to be talking about how to trade these, some things we want to be looking for if it's your first time into shares or you're not too sure about Australian ones. They're a little bit different to some of the places in the world that you might have traded, like the American ones that are currently available. My name's Thomas Atkinson. As always, I'm joined by Tyrone Abella. We have seen a lot of interest in shares and stocks around the world, Ty, since all of that GameStop AMC scenario. But now it's time to talk about some blue chip opportunities. How have you been?
Yeah, good. Yeah, look, this has been a big request. Welcome, everyone. This has been a big request for a lot of people over, certainly a long amount of time to have Australian CFDs on the Pepperstone platform. And as promised, Pepperstone are coming to the party and really growing out their index of, basically you'll be trading anything soon. So this is just another level that we've been presented with, and we're really looking forward to it because this is very close to our hearts because this is what we do day in, day out. So yeah, very keen on getting into this one and explaining what we see every day.
Yeah, plenty of good things to go about. Plenty of also hidden pitfalls that we're talking about that are very important, little bits of snippets of information that if you don't know what you're doing and you make that mistake, it can cost you. So we'll talk about those today. Obviously, before we get started, quick risk warning, the information contained in this video or webinar is generic in nature and for educational purposes only. The information does not take into account your personal objectives, financial situation or needs, and you should, of course, make your own decisions or seek independent financial advice if necessary for your situation. So quick reminder, we've been doing this all the time, Ty. We've been talking about Telegram groups, our Discord group, those types of things. Obviously, Pepperstone have an amazing Telegram group where they provide update little snippets of information. Usually there's one in the morning that tells you a bit about what happened the previous day, things to look out for, and updates such as this webinar and other webinars and other information that Pepperstone are providing. So we'll post this link in there. If you haven't already looked at Pepperstone's Telegram, definitely worthwhile doing so. You can also check us out. We're from FX Evolution. We have a YouTube channel, FX Evolution video on, but you can pretty much just search FX Evolution on YouTube and find it. And we also do have a Discord community there. So what are we going to be covering today, Ty? Well, we're going to be covering scalping and swing trading opportunities. Who loves swing trading? We do. Who loves scalping? We also do. So both have a very clear kind of way of trading, and actually depending on the time of day that you're going to be looking at, especially with stocks and shares, it can be very, very good to scalp, and swing trading, there's always usually some kind of opportunity. We'll then be taking a look at some live charts and price action analysis. We'll be having a look at the charts and what we're seeing and some of the things that we look out for. The best MetaTrader5 indicators to use for things like stocks and shares, and of course, live Q&A with our team. If you have questions, feel free to ask them throughout this session. So Ty, to begin with, and we say this all the time, news. Make sure you're aware of the earnings. Now, if you're going to trade ASX 50 stocks, what do we need to know? When earnings season is on. And right now you can see we're in the middle of earnings season. We've got the 10th of Feb here, the date of this recording. One of the big announcements today, Commonwealth Bank of Australia making an announcement about their earnings report. Now, if you're trading a CFD, do remember that the market will open at 10 a.m. in the morning. Then it will close at 4 p.m. in the afternoon. Now, there's a little match period between that point, but basically it's 10 to 4. If you are in a position and then the market closes and the CFDs are no longer able to be traded, and the next morning there's an earnings report coming out pre-market, let's say for Commonwealth Bank, do remember if this report is good, then the stock or share may go up. And if you're shorting the stock, because remember you can in this case short or buy with CFDs, so you can sell them or buy them, you could be out of money. And remember, you get the next available price. So we'll talk about that more today, but when you're talking about shares, you must be aware that they're not like your currency trades that you might currently do, and not like your commodity trades. Commodities do close for periods. Currencies generally open all the way through the week and close on the weekend. And of course, some cryptocurrencies just never close. but 10 a.m. to 4 p.m. for the stock market in Australia, that is Australian Eastern Standard Time, so 10 a.m. AEST. And when you've got these types of announcements, you should be looking. This is just the Yahoo calendar report. You can see the 10th, you can look at the 11th, the 12th. Be aware of the companies you're trading and when they're coming out. Ty, how important is this information?
Extraordinarily important, and it's also really important to note that most announcements don't happen during the trading day. They usually are after market or in the pre-market before. So don't think that it's a standard given like it is, say, London news happens right in the middle of the London session. That's not how CFD reporting works. Stocks generally report after market or before market. So it's not unusual that you're going to get caught on the other side of the close. It's going to be almost a fact that you're going to get caught on the other side of the close. So that's why it makes it even more important to understand when they are going to be, because they are always out of the market when they're actually announcing their earnings report and what have you, even if it's an important announcement to the market.
Another thing that's unknown sometimes in the Australian stock market, Ty, is in the American stock market, they tend to kind of freeze or halt a stock for 5 minutes to 15 minutes when things are becoming unusual. Now, in the Australian market, generally they will either halt it, this is unusual activity, or they may there may be unforeseen kind of reasons why a company would halt. So this is taken from a company this week. You can see the dates, or actually last week, and when they halted it. And basically they pause the trading. Now, when this trading pauses, can you close the position? The answer is no. When that happens, you have to wait for the next available price, which is going to be when the request is taken out. Now, sometimes these can be multiple days. So this one here, it was halted on the 5th, and I believe it reopened on the Monday, which was this Monday, which was the 8th. So actually, you had to hold the stock. You were not able to sell or buy it over that period. So that, remember, is an unforeseen piece of news that we need to be aware of when we're trading CFDs. You don't have to be concerned about these things. Often they'll work in your favor, but remember, we want to have as much risk management as possible. Now, which shares are best to start with? So we've talked about the fact that we've got the ASX 50 on the Pepperstone platform, MetaTrader5 right now. I think though, and I think Tyron would agree with this, it's kind of like when you begin in currency. If you begin in currency, what do you always hear? Trade the majors. People say pound US dollar, euro US dollar, odd US dollar, etc. In the stocks or in shares, it's the same thing. The ASX 20, usually the more blue chip, higher capitalized companies provide very good trading opportunities. They're also more stable. So remember, we were talking about the market 10 to 4. The thing about these companies, isn't it, Ty, is that when you get crazy news, they tend to move maybe 1 to 3%. Maybe they move a little bit more, but they tend to move in these kind of action. Very rarely do they move 5% or more around earnings. This means that they're more of a stable tool when we're trying to scalp and we're trying to potentially day trade in and out. Now, Ty, with the penny stock, we could be looking at 20 or 30%, couldn't we?
Oh, most definitely. And look, it comes down to, just like in the currency, it comes down to liquidity. So, if you're trying to move a market like, say, BHP or Telstra or CBA, any of the big banks, any of the majors that we're talking about here that would be prevalent in the top 20, they're worth billions and billions of dollars, and an extraordinary amount of volume has to go through to move them that 1 or 2%. Whereas if you're trading the what we'd call a penny stock, just like you're trading, maybe a Mexican peso, it doesn't take anywhere near as much volume to actually make it move a lot. And that's the difference. It's effectively the same thing as to what makes it move quickly and with a lot more volatility. So that's why we say, if you are starting out with shares, you are better off looking at the blue chips, because they're a little bit more predictable, because it takes a lot more money to actually move them. Now, for a company to move 3% when they're one of the big banks, or Telstra or one of those really big major companies in Australia, you're talking about millions of shares changing hands, like millions and millions of dollars in a day. Whereas some of the penny stocks, sometimes you can't even get on because there's just not enough liquidity there. So it's really, really important to remember that, especially when you're first starting out, to stick with what you should require less volatility, because I know volatility is your friend generally when you become an experienced trader. At the start, it can be your worst enemy.
Certainly can, Ty. And there's a few other things that you want to also think about, that sometimes in the ASX 20, there's actually a lot of volume that goes through as well. Some ASX 20 stocks are traded more than others. FMG comes to mind straight away, Ty. That's always been a bit of a favorite for traders. It was that stock that always had some of the highest volume on it per day, didn't it?
Oh, most definitely. Yeah, that's exactly right. It really pays to know the stocks that you're trading. And I think what I like about, we might as well talk about it now, because this is what we probably love about the market and CFDs, is that not that you have an intimate relationship with that company, but at the end of the day, stocks are a lot easier to understand from the standpoint that we know how banks make their money. We know what will affect bank results. We know what may send banks going backwards or forwards, just primarily by looking at their results, at their reporting. Whereas when you're looking at the Euro USD, there are just hundreds and hundreds of different reasons why it may go up or down on any given day, and it's very, very difficult to ascertain what is actually causing something to actually go up or down. Whereas in the stock, a lot of the time, sure, there are outside influences outside of the stock's control can make the market go up and down, but generally speaking, most of the time the stock behaves within its realm, and I think that makes it just a little bit easier to research and trade.
Yeah, I think it does, Ty. You also get a lot more information out of there. You feel a lot better as well when you're on the long side potentially. The other thing is we can track it more with things such as the ASX 200. So this remains probably one of the most important overall technical charts to study and understand. And as you guys would know, we're all about the technicals. So when we understand the ASX 200, what it's doing, whether it's hitting resistance, whether it's hitting support, then we can go into the ASX 50 stocks. We can find and pinpoint ones that we're interested in potentially buying during a correction, or potentially selling during what we think is maybe an overheated market. And we can pinpoint that with the ASX 200. So next up, Ty, things like stock market or share market returns over time. Now, this is more of a fundamentals thing, but still always interesting to know. And that is, how do months tend to stack up against each other? So this is obviously for the S&P 500, but whatever happens in the S&P 500 probably happens in the ASX 200. It has a pretty clear synergy with each other. If we have a great month in the US, and the US has got a 1.5% average return on it over the last pretty much 100 years, then you know that April is it's generally going to be a pretty good month in the ASX as well. So you can kind of get a bit of confidence. We talk about this all the time. Confidence is key when it comes to trading. So we've got a question coming in here. I'm going to answer it straight away. Well, this one here is from Naveen, and it says, if your stop loss on a CFD stock that you're trading halts and goes down below the stop loss after it, will you close near the stop? So let's just quickly give an example on the screen here. So let's say we bought something at $20. Okay, we bought it. Cool, this is our line. It goes into trading halt, we bought it here. We had a stop loss at $19. Now, technically, if the market opens up at $18, you're going to get the next available price. So the answer is you'll actually clear the stop loss, and because it halt and froze, you will actually get it out at 18. So you will lose the other amount. Now, that's traditional with all of these types of CFDs, and if you're not aware of that, then you do need to know these types of things. I mean, Tyrone, I'm sure we've all understood and had this happen to us once or twice before, but it's actually quite rare this happens, isn't it?
It is, but look, you've got to look at it like basically it's like gapping on a weekend. Okay, so if you have a stop loss on the we'll pick on Euro USD. If you've bought at 120, you've got a stop loss at 119. And you hold it over the weekend, and there's the G20 summit, and all of a sudden it opens up at 117. 117 is the price you're going to get, even though your stop loss was at 118. So it's exactly the same. So when the market's actually closed, the open price of the market, if it's on the other side of your stop loss, is what your stop loss will be filled at. So the easiest way to remember it is basically like a gap, a weekend gap would work in the normal exchanges.
So one of the other benefits or advantages of trading ASX 50 shares and Australian shares in general is probably the one I'm going to underline right now: dividend payments. It's what's always made a pretty attractive purchasing in Australia, specifically around the bank stocks, BHP, Rio, Wesfarmers, Woolworths. All of these types of stocks generally tend to have a big dividend payment. Now, I just want to let you know this because, again, a hidden pitfall that some people don't know is if you're buying the position and a dividend comes out of the stock. So we'll use this example again. We have $20, we buy the position. Then what happens is this stock pays a $1 dividend. It will actually drop down to $19 on the next open, theoretically. That's what it should drop. It tends to either drop more or less depending on the market sentiment for the day. But we have $20 buy, the dividend gets paid the next day, $19. We will actually receive that $1 payment into our account. Now, if you're selling this stock, because it goes down $1, you'll actually benefit on the trade. However, you will lose. In fact, you will need to pay the $1. So it's net pretty much the same kind of thing, because remember the market's moving down on the sell side. One you receive, one you pay. So remember, if you're shorting or selling a stock around dividend dates, and that's why it's so important to remember with shares, dividend payments and dividend dates, then you will either pay or receive that amount of money. There is also no usual franking credits on CFDs. So the CFDs don't tend to have franking credits. It's something that a lot of people don't understand as well. Franking credits unique to Australia. It's a taxation thing. We won't go into that today. But yeah, CFDs don't have that.
But one thing I will touch on that just quickly. The good thing about dividend payments is that, especially for only for long trades, where it's going to help you really, with dividends being paid, sometimes it acts like a little bit of a turbo boost, just like in normal stock trading. It can act like a bit of a turbo boost for the stock if a dividend is coming up. So it's really, really important to know that they are coming up, because say, for instance, as an example, if you've got a double bottoms and you're looking at going long and there's a dividend being paid in, say, a week or two, there's a really good likelihood that that's probably going to help bolster the stock and actually send it higher. So it actually helps your trading direction, even though it's not a technical reason to get in. If it complements a technical reason, and having a dividend in front of it generally is, because people do buy for the dividend. Don't forget, the CFD replicates what the real stock is actually doing. So as much as you don't get franking credits as a CFD, people who are actually trading BHP or Telstra are going to get franking credits, and they are very, very important to many, many traders in Australia. So the CFD is going to get the on-flow effect, even though you're not going to directly benefit from it. The movement of the stock will directly benefit you.
Yeah, so there are some benefits to knowing when these types of things are going to come out. Remember, people chase the dividends, as Tyrone said. So because you have maybe super funds, retirees chasing it, you see a support, you buy it up. This is what Tyrone's talking about. It comes up here, and then maybe the dividend pays here and it comes back into support. But there was demand because you knew that 2 weeks out. Dividends are incredibly important knowledge bases and earnings season for shares and stocks, but specifically in Australia, it's all about the div. The div is super important, and a lot of people trade into it to collect that income. And now, considering we have such low interest rates in Australia, obviously we've got 0.1. In other countries, we've got negatives. This is something that people are now chasing, dividends. So you can go to Pepperstone's website. You'll notice here it has dividends for share CFDs, and it talks about what's going on. It also talks about basically some of the ones on the American. I'm sure they're updating this to the Australian ones as well with the dividends that are paying out. And you can see ex-div, what that means, obviously the day after, timing, adjustment, everything like that. The other thing, hours that you want to trade. So some things trade outside of hours. Now it looks like we're going to have 20-to-1 leverage to begin with, Tyrone, in the Australian stocks. However, things will change when the ASIC intervention laws and come through. Remember, it's going to be most likely a 5-to-1 change. So at the moment, it might be 20-to-1, but in the future, possibly 5-to-1. Just remember that. Look, you shouldn't really need any more than this anyway, but it will change in the future. So be warned that that is going to happen. Let's just quickly go in now, Ty, and get a little bit into the charts. And we'll talk about, we won't be talking about Bitcoin, but we will be talking about the ASX 200. So here's the ASX 200, and you can see what's happening over time. Now, there are technicals that you learn in these indices, and then you can go and apply them. Because remember, the ASX 50, they're all large cap stocks. Whatever's going on, generally speaking, in this market, like this week here, there was a very high chance that almost every single stock in the ASX 50 would have been green, as in up for that week. Very big movement. So some of the things that can cause this, well, we always talk about technicals. When you have a technical breakout of a resistance, and you can see how great this resistance was, is that a time that we might be interested in going and dialing down to our favorite stocks and potentially getting opportunities? Absolutely. Every time it's coming down to other support levels, is that something that we might be interested in? Like recently, it came down here, 65.70, 65.70, 65.70. Use the indices or use the index ASX 200 to get yourself to be able to say, okay, here's a zone I'm interested in, and then dial into the specific stocks. So I do think that's something that a lot of people don't utilize enough. I mean, many people do, of course, but some people don't. So everything like that. What about if it hits these resistances? So you can see here, it hit resistance once. Maybe that gives us an opportunity to short or close our order. Hits the resistance twice. For day traders, what do we know? It's got 1, it's got 2, it comes back, hits that level. Great day trading opportunities. Buy level zones off the previous resistance, becoming support, nice little entry periods for our day trade. So for many people that trade CFDs, they like to be in and out within that day. So if we're buying the support down here, that will give us the idea when we see these wick candles that bullish momentum's coming back into the market. What does that tell us? We've got potential targets up here. We can basically trade our way with bullish sentiment until it hits the top. When it hits the top and it comes down and tests, we can buy off that zone. And you can see even recently it's bought off that zone. So these are the types of things we want to do. And I like to use the ASX 200 as much as possible to get an idea. What are your thoughts on that one, Ty?
Yeah, definitely. Actually, we've got a question here that Thomas is going to cover in a minute about the holding costs and if you get trapped in a stock. Thomas will touch on that in a second, but it's probably a good time now to highlight the fact that a lot of people are asking, can you use technicals in the stock market and in the indices? And I think it's a really, really important point because a lot of people don't probably understand that technicals actually work exactly the same way in the stock market as they do in, say, currency or gold or oil or whatever it is that you're trading. The beautiful thing about technical analysis is that everything actually does correlate. So say, for instance, Thomas is pointing out this channel here where the resistance and everything is ripe. What you would be trading this exactly how you would be trading the Euro USD or any of the other currency pairs. So that's the wonderful thing about the stock market, that you get the added bonus of things like dividends that could bolster your move. It can be a little bit easier to read, but just as importantly, the technicals are the completely the same as they are in currency. So the learning curve for actually being able to trade the stock market is extraordinarily similar, but you must get your head around the fact that it is only open for 7 or 8 hours of the day. That's probably the biggest change that people need to get their heads around.
So we have the question coming in here. This is a good way if you're in MetaTrader5 to find out some of the costs. You go, basically, I'll just do it with you now. So right click, go to show all or symbols, load up all the different equities. And what you'll notice is when you click on like a US equity, it'll have details about how much it costs in and out. Here's the Oz equities. You can scroll down. You can see the cost 0.035 in US dollar per lot, minimum 1.94 in terms of commissions, and then percentage swap. Now swap will be based on the daily rate. I think the daily rate can be probably found. I would recommend that you contact Pepperstone support and get there. This is a very new product, so I believe they're going to have some changes coming in for it. So maybe just contact them, contact your sales or support agent at Pepperstone, and they'll give you the rate for that. So it's something that usually you come in here and you look for. It's like a currency. Yeah, if you go to a currency, you go to pound, you scroll down, you can see the swap long and swap short for the contract size per day. You can also see that the standard kind of commission, etc., in the commission account. So everything's generally in here, but for stocks, and because these are so new, the daily rate I would work out. So there will be a daily, remember you're buying this generally with margin, whether that's 5-to-1 margin or 20-to-1 margin, it will have a small cost on it. Now in a low interest rate environment such as it is, it's quite low. So I expect the spreads to be quite tight between the stocks, be very, very tight. And I also expect that the holding costs shouldn't be obscene.
Yeah, and they are going to change. You've got to be very mindful that they are going to be changing in the next few weeks because of the obviously the ASIC ruling. So as the margins get smaller, your positions are going to change. So the contract sizing will be changing. So the holding costs will be changing. So just be mindful that it is going to change in the next few weeks.
So here's just an example of how we get access to all of these. You can right click on your chart, left click show all, and you'll notice they are all now appearing here. So you'll see things like Fortescue, we mentioned that before. IAG had an earnings report today, quite nice. You'll see the nice earnings report that came out here and what happened, big movement up. And you can generally get all of your bank data and everything else here. So ANZ, et cetera, et cetera, et cetera. Basically, if we go through time, you'll notice this one has complete data. So let's have a look at this and just see the resistances and the supports and how things play out. So here we have, and this is being completed, I believe, as we talk. So basically this data should hopefully be coming in for the previous history, so you can go back through the TA. So we have like a resistance zone here at the 23, kind of 72. You can see that when a stock usually breaks out, some stocks react differently. Like if you had Tesla, when it breaks out, it doesn't come back. But as we know, when a stock breaks past a resistance, it tends to come down, consolidate above a zone. If it does that, then it's very good to move to the next area. You also notice that it stops and finds resistance at some areas. So here's a bank, ANZ, it's come down, it's hitting support. Maybe that's an interest to us as a day trader now that it's gone past the zone, come down, and it's testing a level where you might find some buying pressure. All of these types of things you can do in here. And remember, you apply the same technicals and price action approach, like channels, double tops, double bottoms, all of that to the stocks. You definitely can do all of that. So we mentioned so far that we've had dividend payments. We need to watch out for those. Time of the day to market trade. The first hour generally has the biggest amount of retail investment. That means you, me, everybody else, we all tend to come in here and purchase in the first hour. That's usually the most fun kind of hours, people say. But actually, contrary to that belief, the biggest volumes generally go through at the end of day. That's when the super funds and everything else tends to do it. And I always suggest that if you're ever looking up or loading a stock, you always should be looking at a day chart first. Daily and weekly should be coming onto your, even if you're a day trader or even if you're a scalper, you need to look at these two time frames. You need to get a lie of the land, the top-down approach where we go through the weekly or the monthly into the weekly, into the daily, into the 4 hour, into the 1 hour, etc., to get an idea of the strong resistance and support lines. Like all shares as well, they tend to gravitate towards round numbers. Now, if a share is reaching $25 for the first time, what you'll generally see is it might stop at like $24.98, not go to 25, and then sell off. It does this because there is a huge amount of orders that people usually place at the round number. When you're thinking about getting into a share, maybe place your trade 2 cents above 25. If you're wanting to buy it as it comes down, instead of going for 25, go to 25.02. Remember, buying limits and things like that, never get too greedy to get the exact price, because what is actually here, Ty, is a huge amount of buy orders, and most beginners usually put it in the round, don't they?
Yes, they most certainly do. And it's really important to know that, because sometimes you'll be kicking yourself when you just miss out. And it does come down to just that volume. And look, just touching on what Thomas said about the end of day closing, you've got to remember that a lot of people who trade the stock market, and CFDs effectively the same thing, is they're trading the end of day because that's when the daily candle is technically closing. Remember that the market's closing at 4 o'clock. So if you're trading using a daily chart and you want to trade off what looks like is going to be the close, obviously towards the end of the day is going to be the most accurate representation of that daily action. So that's why so much of the real money, especially the big money, is traded at the end of the day. So it's really, really important to remember that. Not that you can't trade throughout the day, but just be mindful that a lot of volume does go through in that last hour.
Okay, lead indicators for market sentiment. So volatility index, usually the VIX in the Pepperstone platform is based on the S&P 500, but we've already learned what happens in the S&P 500 sentiment-wise tends to roll over into Australia. When things crash in the US, things crash in Australia, and so on and so forth. So volatility index, the VIX, certainly something that I'd be looking at. If the VIX is above the 20, which is what we're seeing right now, you can expect higher than usual volatility through shares. Copper, also something, Dr. Copper as we know it as, is worthwhile looking at. Out of recessions into recoveries, copper tends to bull, and that means copper goes up. It's also possibly good for some of the shares, things like BHP. You've seen that go up quite a lot recently because it has many precious minerals and materials. So we see the movement go up. Now, if copper starts to decline heavily, and it does so, and the stock market or share market continues to go up, this can be of some concern, and we can then place that as part of our strategy to try to figure out what's going on. US dollar also is something that we look at. If you see US dollar uncharacteristically start going long, it holds along for a period and goes bullish, and the stock market isn't selling off, that's actually a weird thing as well. Generally, the US dollar will go up and the stock market tends to go down. Again, the S&P 500, if it goes down, so will the ASX 200 and therefore the ASX 50. Times to trade. So what are we going to be doing if we're a scalper or a day trader or a swing trader? When do we want to trade? Good news for swing traders, you're basically just looking at those daily, weekly closes, and what you're then doing maybe is going down to as low as a 4-hour. You're making investment choices in those areas, and you don't actually have to be really a slave to the market. You set alerts, you come back when those alerts happen, you possibly check the open and the close, and until those alerts or limit orders are being hit, you don't have to do that much effort. So this is actually an excellent type of trading style for people with not much time, part-time traders. If you're a day trader, of course, you'll want to be around in the morning. There's a few things that are unknown to a lot of people. That is that, of course, we want to be opening at 10, but also there is a thing called margin call time. Now, margin call generally happens between 11 and 12, and sometimes in this area, you actually see a little bit further dipping. So you'll often have, like, say you have like a down day. The down day will continue, usually around to that 12 tie, and then often it just does that little bit of a pickup through the second half of the session. How many times have we seen that happen?
Definitely, yeah, most definitely. It's got to be. This is probably. It's actually funny. I know you say this because I know we talk about it all the time in currency, but knowing the market that you're trading. But when you, especially when you are trading CFDs, you really need to understand the market that you're trading, whether you are a scalper, day trader, or a swing trader. I think that's probably one of the most important lessons that you can take out of today, because things happen. Yeah, it's not that they happen really quickly, but your time frame is dramatically reduced depending on whether you are scalping or day trading. Now, if you are scalping, very rarely are you going to hold over a closed period. So that really reduces your trading time, and you really got to be very mindful of that.
Okay, so yeah, between 11 and 12, definitely a time that I would be paying attention to the markets as well during down days. Often can be that margin call for bigger traders, and therefore there could be a bit more of a slip. I would also think that if you're trading a hot stock at the time, things like moving averages will also be important for a day trader. So remember, the moving averages we use are 20, 50, and 200. Very good for stock. EMAs for the 20, EMAs for the 50, and then the 200 is the SMA. Scalping style. Now, how do we do that? Well, if the morning is hot and things are breaking out of channels, say you have a range, and then the market kind of heats up and it closes through here, you might want to jump on board that type of trade, use the CFD, put your stop behind maybe a moving average that's coming through, and then of course scalp it for the direction. You can often find that stocks will, when they run in the morning, they'll often heat up and continue to run depending on what the news is. So as soon as you see a stock like, let's say, FMG running, what are you going to check? I'm going to ask the room this. Does anyone know what FMG, what do you think would be the first thing that Tyron and I would check on the internet if FMG looked like it was moving up, other than a company announcement?
Yeah. Now, for everybody who doesn't know, FMG is Fortescue Metals.
That is true.
Yeah, just in case, because I guess they're very automatic for us because we know the code probably the top 200. But yeah, just so generally speaking, look, for people who don't know, just so you are aware, generally the letters in the CFDs represent the company name. Most of the time, they are an abbreviation of the company name.
Very good. Iron price. Yes, exactly. So you would 100% be checking iron ore price for the day before. you'd be having a look at how that looks on a technical chart as well. And then you could make maybe a more informed decision about whether that breakout is going to be sustained. Remember, if iron ore price is breaking out of a resistance, and this brings me to my next point. So if we see iron ore price breaking out of resistance, at the same time, we've got FMG breaking out of resistance, it's a match made in heaven, yeah? Same with Rio and BHP. Now, if you're thinking about other things, what other potential shares do we have in the ASX 50? That's right, we've got gold shares, Newcrest, something like that. So if we have a gold moving up and your gold analysis is saying, hey, we're breaking out to a new high, potentially rather than even trading gold spot, if you prefer to own the share, you can go buy the share. You know the benefit of the share? You often can get a dividend from it as well. So maybe you want a long hold for maybe 2 to 3 months or a few months, you can do that. So you can do that by holding rather than the spot, buying the share itself. Breaks out, probably the share is doing something very, very similar, and you match them both together. So times of trade for part-time scalpers and day traders, you're going to want to come in around 30 minutes before the market session. This is usually 10 a.m. open, Australian Eastern Standard Time. And when you come in, you're going to want to look at your ASX website or an alert, basically like the Yahoo economic calendar. Make sure that you're aware of any economic news. Make sure that if you have a few shares that you're interested in trading for that day, then you are very well aware of any particular market reports. I recommend that you might just go to the ASX website, asx.com.au. So it's just asx.com.au, and you might search, let's say, Rio, and you'll just see if there's any company announcements. Make sure you're aware of those for the day. And then, of course, we want to target breakouts and potential support levels for buying. Now, if you're a beginner to share trading, what is it better to do? This word here, buying. Shares are inadvertently going to go up. I know a lot of people want to short them. CFDs allow you to do that. We want to sell against them, but buying is actually easier than selling. And there's a few reasons for that. One, what are these shares? They're companies that employ people that try to make more money for that company. When you think about it that way, plus inflation, it is much easier to buy a share and make money from it than it is to sell a share and make money from it. It's just that when you do sell a share and you make money from it, it often can be very, very fast. It's what Tyron always says. When a market declines generally much faster than it increases. Last year was a bit weird. We saw a V-shaped recovery, but usually not so much. So for scalpers, you want to come in 30 minutes before the session, generally trade around in the first kind of hour and then possibly the last couple of hours. And for the most of the middle of the day, possibly not as good as scalping opportunities. A little bit slow down happens, less volume goes through. The two main volume periods, last 1 hour, first 1 hour or 2 hours. Then we have the day trader. What do we want to be looking for? Channel breakouts, very, very good. I've seen some amazing channel breakouts over the last couple of weeks. Things like West Farmers comes to mind. You've had BHP before that. All of these types of shares have moved quite a lot. Moving averages in trends with role reversal, another one that we want to be looking at. If we have a market moving up, 2 steps forward, 1 step back, here we've got resistance, comes back, finds support. At the same time, we have a 20 moving average, probably the most common daily moving average that stocks come back to. We could look to buy this area and of course profit from the upside. So well worth learning role reversal. We've done plenty of videos on this, Tyrone, and they're all on the Pepperstone YouTube site. So channeling markets, breakout strategies. What about some indicators to use? Channeling markets, stochastic MACD divergence. Ty, how good is stochastic MACD divergence when we identify a channel? It's pretty good, yeah?
Oh, it's fantastic. And yeah, like I said, they work the exact same way they do in currency, except that what you'll find is that the stock market can often be, again, a little bit more steady, especially on the bigger, top 20 to top 50 sort of stocks. You're going to find a lot more even flow of money going through them. You're not going to get the unexpected surprises. So it means that, the stochastic signals and also the MACD signals, when it is stuck in a channel, do hold up really, really well and prove to be quite reliable. So I think you'll really enjoy it. I think when you start to look at it, certainly, do some trials first. Like, you don't have to jump straight into the markets. Do some analysis and practice and bring your skills that you've learned in currency over to CFDs. But you're going to find that quite often they're even easier to trade than the volatile currency markets. You're going to have a good time, I'm pretty sure of it.
So for swing traders, it gets even easier. You basically just target the major indice of that country. In this case, it'd be ASX 200. We look for daily close candles and weeklies, and then we just come in and we check the charts maybe 1 to 2 times per day. It's the easiest type of trading, easy. Very low amounts of time needs to be put into swing trading. So if that sounds like you, swing trading. If you like putting in 3 hours a day, scalping. If you like putting in about 2 hours a day, day trading. So we mentioned before that there's certain months of the year that things work well. But in the share market, there's also the added extra of sector performance. And what this means is sometimes certain sectors outperform others, and then what's called rotation occurs. So we've done this slide before. I'm using a S&P one, but it's the same concept in the ASX. So you can get these particular sectors, you can find them on the internet, this type of stuff, and you can just see it in price as well. And what that is that during certain times of bull cycles, this is actually taught in our course, Ty, we talk about bull cycles and how certain sectors perform better over time through recovery. Usually you will see like these sectors do better and worse. Now, when you look at that over maybe a 3-month period or a quarter, you might see a rotation. So to give you an example, what we've just seen recently come back out of the market was we had a massive rotation into iron ore. We saw BHP, FMG, Rio all hit massive, massive highs. Then at the same time as that, we had that correction period and money moved from those into other stocks. We saw the banks have a resurgence, etc. So sector performance for 1 day, for 3 months, for all of that, make sure you look at this and make sure you're very well aware. Utilities is suffering a little bit right now. Why is that? Utilities is a later cycle sector to be invested in. So you want to understand these things as much as possible. Sector performance over a year. Here's an example of how good the technology sector has been going because of the pandemic. In Australia, it's the same thing. The technology sector has been the best. And of course, the financials and the energy were lacking. Now, if we took the updated one here from November onwards, guess what's happened? Energy and financials have actually outperformed tech completely. And you can see that in Australia's stock market. Look at Australia's stock market and how much more it's gone up. We talk about the top-down approach all the time, Ty. This is where you go from the monthly down to the weekly, down to the daily. Even if you're going to trade a 5-minute chart using the ASX 50 shares, we still recommend that you have an idea where the weekly and daily supports are. It is more important in shares than anything, even more important than currency, to know exactly where the key resistance and support levels are. So we want to be using the top-down approach as much as possible. We want to recognize trends as much as possible. Following bullish trends is easier in the share market than following bearish trends. These trends do not tend to last ever over 1 to 3 months unless we are in a full-on crash. So in a correction phase, it's very rare for a correction phase to go over 1 to 3 months, isn't it, Ty?
Yeah, most definitely. Look, and the one thing I'll probably highlight is now that we are looking at obviously CFDs, and obviously everybody here is interested in CFDs, we do actually have a whole technical analysis foundations masterclass on the stock market and business cycles and all the things, sector analysis that goes right into depth on a lot of stock market issues. It's actually a really, really big course. So if you are interested, definitely hit us up because we have got an announcement that we're going to put out in a minute, but we've got a whole course designed specifically for the stock market and how business cycles work and how earning seasons work, and a whole different strategies that you can actually apply to complement your technical analysis. So very, very important to you really understand how these cycles work, because it can make a key difference in how you actually place your trades.
Cycles are such a big deal, Ty. Like when you find a hot market and things go crazy, if you knew that that was the timing for the cycle, you're not ever going to know exactly, but if you know that's around the right time, again, it gives you confidence, and confidence is a big part of your psychology. I draw this for everybody that we mentor, Ty, and I draw my little things, and this comes from someone else. It doesn't even come from me. And one of them is your trading system. One is your risk management. And then the other one is your psychology. And your psychology is, of course, the most important thing in trading and investing and everything. One of the things I find so many people suffer with is not being able to hold a conviction in their trades. Some people have been trading Bitcoin and cryptocurrencies for years. They've been buying them and holding them. The conviction has paid off in those investments. Now, it's not, you don't want to be stupid sometimes and hold things that aren't good. But again, with trading, if we believe, let's say in this channel here, that we should be going this distance, then should we hold it for 80% of this distance when we buy here? Yes, we should. If we don't hold it for 80% of that distance, why is that? Is that because our system tells us we want to take the trade out at the end of the day and then revisit it the next day? Sure, that's fine. That's okay. You can do that. But if you're using a system that's meant to hold it to the 80% of the target of the channel breakout and you take it out here, you've really failed yourself. So just remember, when you do pattern analysis and all of these types of things, very important. Double bottom patterns, incredibly common in shares. Look for these on ASX 50 shares. Look for the channels. We remember Woodside Petroleum Tie, you know what I'm going to say, the multi-year channel just underneath $40. I think it was about $38 to $40. You can go and have a look at the previous history. Woodside Petroleum, obviously a very large share in Australia. That stayed in the channel for ages and was a great day trading opportunity. So we want to be looking for these types, and we notice we've got bullish ones here. Why do we have bullish ones? Because shares are inherently bullish more than they are bearish. Inverse head and shoulders, double bottom, flag patterns, quite common in shares, worthwhile looking at that. More common in shares, I would say, than commodities and currencies. Ty, your thoughts?
Yeah, most definitely. And look, we could probably go through a million examples where you would see these patterns and say, how could you possibly miss them? And I think because of the steadiness of what we've been talking about, because especially some of the bigger, patterns that we're talking about, you're going to see them on the dailies and you're going to see them on 4-hour charts. But dailies in particular, they really, really do hold up well. I mean, we can show you, maybe we'll do this at another webinar where we'll just focus on patterns only, but there were just some really, really good examples on daily charts where you think, wow, they're even clearer than they are in currency markets. So yeah, really looking forward to actually probably doing that at a later date.
So as we're getting to the end for the Q&A, please ask questions right now if you have questions as well about these shares that are available. Remember, don't FOMO. Right now, it's quite easy to think that every single share is going to go up forever. In fact, they've been called stonks, I've heard now, Ty. Stonks is the new name for many stocks out there. And that's because everyone believes they only go up. But just be careful and always practice good risk management. You don't really want to be going into this cycle of getting all excited. We might be in a little bit of the thrill and euphoria right now, and we don't want to be the person panicking and it got some serious despondency. So just remember, always try to put it in perspective. Now, this is, of course, a currency example, but everything we teach is the same principle. If you have 3 or 4 resistances, and then that resistance is broken and closed above on the stock or share, do you think that's going to be a strong move? It's probably due to a fundamental event, an earnings report or something like that. That generally triggers purchasing into the next zone. It's actually easier to trade these in many ways from a technical standpoint. Moving averages, 20, 50, 200, MACD, range-bound markets. When you identify the channel, use MACD for day traders and scalpers, and of course, stochastic as well. We've used a few of these slides before. Risk management strategies always have a stop loss when using CFDs. They are a leveraged product. Understand that, understand some of the key risks we've talked about, and always try to make sure that you're getting a 1-to-1 or better risk reward. If you're risking $100 and not making $100 and you're only making 20, that is not a recipe for success over the long time. So Tyrone mentioned this before. We have a 10-year anniversary special, 50% off site-wide. We've never actually even discounted the stock course. This is the first time we've ever done it. It's not even available now, but I thought we'd launch it tonight. So if you're interested in finding out more about our stock course, about our technical analysis course, or anything else, or even our private Discord community, jump onto our website, use the coupon code 10years, and you'll be able to get a 50% off discount. This is because we've been around for, that's right, 10 years. So we've been trading longer than that, but I'm looking at this having almost a heart attack, Ty. It's been a long time.
It has been a long time. Yeah, it is our 10-year anniversary actually this month, and It's a store-wide 50% discount, and that actually even applies to our mentoring program as well. So, but there is a catch on the mentoring program. We are only doing it for the first 10. So, as much as it is store-wide, only the first 10 mentoring taken up are going to have that 50% discount, because that actually is our time, because we are actually one-on-one in those ones. It's not just an online course, so it does take up a lot of our time. So we can only actually do 10 of those at that price. I can't believe they've done that, but yes, it is on that. So the link is actually in the chat room as well. So for anybody who's interested, it is store wide, and yeah, we'd love for you to celebrate our 10 years with us.
We certainly would, Ty, and it's good because we've done it for so long, and obviously we've learned a lot of things, and we try to help you guys through some of the processes. One of those is creating business plans for your trading strategy. We hear from TJ saying, strange to hear you gentlemen say that a 0.5 to 1 risk reward is not good. It's only half the picture and needs a win. Yes, so if we have like a 0.5 win rate, that's not ideal. Obviously, we want to try to make it as much as we can 1 to 1 or better. If we risk 100, try to make 100 plus.
It just means that the problem with that is, TJ, that if you've got a less than 1 to 1 risk reward ratio, you have to have an extraordinary strike rate to actually make money. Whereas the bigger risk rewards give you so much more opportunity to actually place good trades and carry you through, some of those bad times. So it's really, really important to keep that at least 1 to 1. As much as not much changes between the trading of currencies to the stock market, but one thing that definitely doesn't change is to make sure that your risk reward is actually worth placing the trade. Otherwise, you do have to have an extraordinary risk reward basically kicking in. You have to win so many to actually stay in front.
You really do, Ty. So look, that's a bit of an introduction to the ASX 50. They'll be all added, and hopefully they'll get some history in there. If you're wondering how much spreads and everything will be, just remember, load up the charts, take a look at them when the market is open between that 10 and 4. I think it's pretty exciting to see ASX 50. I think it's very exciting for where we're at in the share market and the opportunities that will probably present over the next 12 months. And yeah, look, hopefully someone finds some interest in this type of stuff. And if it's your first time, remember, go back and maybe watch this. Just remember some of those pitfalls. Things like halts do sometimes happen. You just need to be prepared for those and hopefully risk around it. So yeah, thanks very much for joining us today. We will be doing another webinar in about 8 minutes, which is our normal weekly one. We talk about everything to do with TA. We talk about currencies, indices, everything like that. If you want to join us, I believe we've got a link for them, Ty, is that correct?
Yeah, we're about to post a link into the chat room now. So anyone who'd like to join us in the next webinar, let me just, I'll quickly pop it in there. Hang on, sorry, I just haven't got it ready. All right,
okay, just a few questions about the course, I think, that are going through. I'll end today's session, Ty, by basically just saying this, that shares, again, are probably easier to trade than many currencies out there in some ways. But just remember, again, one of the things that we said was that if you look at a share market over the long term, you look at something like the ASX, it is generally inherently long. In fact, there would be a statistic behind that. I don't have it. That usually means the market will go up over time. So if you're trying to short it, I always say, and so does Tyrone, best to come in and think about more the long side, because it's inherently like that. If you're seeing an uptrend, it might be better to follow the trend rather than try to fight it. So many traders come undone trying to fight that trend, specifically last year.
Definitely. So yeah, the link is there, guys. So yeah, feel free to join us in about 7 minutes time, where we take a deep dive into the current currency markets. But look, thank you very much for joining us tonight. Hopefully it's been very informative, and I look forward to seeing you all getting into the ASX top 50 stocks, and yeah, really giving it a crack, because it's a big innovation by Pepperstone, and it's going to be fantastic, and I know it's going to grow. So yeah, take advantage of it, and please feel free to fire off any questions that you have that we didn't answer tonight to your Pepperstone representatives.
Excellent. Thanks very much. See you next time, and maybe see a few of you in about 6 minutes. Bye for now.